Hey everyone, welcome back to Corporate Decoder, the place where we translate corporate jargon into plain English and sometimes discover that companies are paying their executives a lot of money to achieve. Well, you'll see. Today we're diving into a recent filing from United Homes Group, Incorporated, the folks building houses. This report drops some interesting details about how they plan to pay their top brass for 2026. We're going to unpack their executive compensation plan, look at who is getting what and why, and see if it aligns with what you might expect from a company in this sector. So, grab your coffee and let's get decoding. Before we dive in, do us a favor and hit that subscribe button and stick around to the end for our take on the company. Also, we have a growing community on Discord where we discuss these filings and more. You can find the link in the description below. So United Homes Group, or EHG Incorporated as they are known, has put out their report detailing the compensation packages for their executives for the upcoming year. 2026 essentially, they're laying out how much their top people will be paid this year. The company's compensation committee, which is a fancy way of saying a group of directors who specifically handle pay, approved this framework on the 13th of January 2026. This framework covers two main things for their executives: their base salaries, which is the fixed amount they get paid regularly, and their potential cash bonuses. These bonuses are tied to how well the company performs. Let's look at the numbers for their key executives. Michael Nieri, who is the executive chairman, will have a base salary of $608,000. Interestingly, for him, there is no target cash bonus opportunity mentioned. That means his pay is pretty much fixed, at least based on this framework. Then we have Jack Misenko, the Chief Executive Officer and President. He is set to earn a base salary of $650,000, and he also has a target cash bonus opportunity of $650,000. That is a lot of zeros, and it means he could potentially double his earnings if the company hits its targets. Rounding out the key executives we're looking at is Keith Feldman, the Chief Financial Officer. He'll receive a base salary of $400,000 and a target cash bonus opportunity, also set at $400,000. So his potential bonus is 100% of his base salary. Now, what does it take for Mr. Misenko and Mr. Feldman to get their full bonus? Their target bonus, which is 100% of their base salary, hinges on the company hitting three specific performance measures. First, there is pre-tax profit, which simply means the profit the company makes before it has to pay taxes. Second, there is revenue, which is the total amount of money the company brings in from its sales. And third, there are closings, which for a home builder means how many homes they successfully sell and complete. The way the bonus payouts work is pretty straightforward. If they meet the lowest level, the threshold for any of these measures, they get 50% of the bonus money tied to that specific measure. If they hit the target for a measure, they get 100% of that portion of the bonus. And if they absolutely knock it out of the park and reach the maximum requirement for a measure, they can get 125% of that bonus portion. This structure is designed to really incentivize them to hit those key performance indicators. It's worth noting that IH Incorporated's class of common shares are traded on the Nasdaq Stock Market LLC under the ticker symbol UHD. They also have warrants, which are like options to buy shares, also traded on Nasdaq under UHWW. This tells us they are a publicly traded company. And these compensation decisions are being made by a publicly accountable board and committee. The company is also identifying itself as an emerging growth company. This means they are eligible for certain regulatory accommodations, and crucially, they have elected not to take advantage of the extended transition period for adopting new or revised financial accounting standards. This implies they are aiming to keep their financial reporting practices up to date with current standards, which is generally a good sign for transparency. Now, for my take on this, United Homes Group is setting up a compensation structure that seems quite standard for the industry, especially for a company that is publicly traded and aiming for growth. The fact that they are basing bonuses on profit, revenue, and closings is very sensible. These are directly tied to the core business of building and selling homes. The tiered bonus system, where exceeding targets can lead to payouts greater than 100%, is designed to really push those executives to go above and beyond. For Mr. Nieri, the executive chairman, having no bonus tied to performance while having a solid base salary suggests his role might be more oversight and less directly involved in day operational targets, or it could be a negotiation point for his overall compensation. The potential for Mr. Misenko and Mr. Feldman to earn up to 125% of their target bonus on each performance measure means their total compensation could be significantly higher than their base salaries if they achieve exceptional results. If Mr. Misenko hits the maximum on all three measures, his total bonus could be 375% of his base salary, leading to a very substantial payday. One of the things to watch here is how achievable these targets are. The report states the committee's approval was based on consistency with the 2025 framework. This suggests they are not drastically changing their approach, which can be good for stability, but it also means they might be expecting similar performance levels to last year. If the housing market experiences any significant downturns or upward swings, these targets could become either very easy or very difficult to hit. That is a risk factor to consider, looking at the overall company direction. EAG Incorporated appears to be focused on driving sales and profitability through its executive team. The compensation plan is a clear signal of their priorities. The key question for investors and observers will be whether this structure genuinely drives sustainable, profitable growth, or if it incentivizes short-term gains at the expense of long-term health. A potential risk for the company could be aggressive target setting in a volatile market, which might lead to executive frustration if targets are perceived as unattainable. Conversely, if targets are set too low, it could lead to excessive executive compensation without truly exceptional company performance. The transparency in linking bonuses to profit, revenue, and closings, however, is a strong point, as these are the fundamental drivers of a home builder's success. In conclusion, United Homes Group is establishing a clear performance-based compensation system for its top executives in 2026. The structure rewards achievement in key areas like profitability and sales volume with significant upside potential for exceptional performance. While the specifics of the targets themselves are not detailed here, the framework itself appears robust and aligned with the company's core business operations. We will be keeping an eye on their filings to see if these executives are indeed hitting their marks, and more importantly, if the company's overall performance justifies these payouts. Alright, that is our breakdown of United Homes Group's executive compensation plan. What is your take on these pay packages and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.